Stocks surge on Wall Street. The indices trade near record highs as Fed Chairman Jerome Powell at the Jackson Hole Symposium indicates that rate cuts are imminent and says that the pace of rate cuts will depend on incoming data and balance of risks. Stocks in the Asia-Pacific open mixed on concerns of another conflict in West Asia between Hezbollah and Israel. The GIFT Nifty is suggesting a higher start for the Indian markets. Crude prices rally on Friday with Brent inching closer to $80 a barrel as Fed Chairman Jerome Powell hints at imminent rate cuts. Gold prices also gained to trade above $25.50 an ounce. The National Stock Exchange announces a rejig of the Nifty 50. Bharat Electronics and Trent will enter the benchmark index as Divi's Laboratories and LTI Mindtree make way. The changes will be effective from the 30th of September. The Cabinet approves the Unified Pension Scheme aimed at benefiting around 23 lakh central government employees. The new scheme guarantees a pension based on 50% of the average basic pay over the last 12 months before retirement. In addition to gratuity, the scheme will incorporate a lump sum payment upon superannuation. The start of a brand new week. You're watching Power Breakfast on CNBC TV 18 in the Mumbai News Center. I am Hormas Vatakia. Greetings to all on the occasion of Janmashtami. Let's first start off by taking a look at how the Asian markets are faring. Well, it's not quite the start that you were expecting considering the handover that we had from Wall Street. Most of the indices are trading positive, but the Japanese markets are in the red. But Hang Seng trading with gains of over 1%, as is the Taiwanese index, but the losses are coming from the Japanese markets. The Nikkei is down 0.8%. Even the South Korean indices are trading below the flat line. So Hang Seng and the Taiwanese index are the outperformers in Asia this morning. Pull up the GIFT Nifty as well, and that will give you a picture of how the Indian markets are likely to open. Positive start indicated the implied open, suggesting a 60-point uptick at the start of the trade. Remember, the Nifty has been gaining for 7 days in a row now. Be interesting to see if these gains sustain at higher levels. But it was a very strong day on Wall Street last Friday, and that is because the Federal Reserve Chair Jerome Powell indicated that rate cuts were on the horizon. Now, the Dow Jones climbed over 450 points, while the tech-heavy Nasdaq gained nearly 1.5%. The S&P 500 also gained over 1%. Now, after Friday's gains, all three major indices posted a winning week. The Dow Jones added nearly 1%. The Nasdaq also adding a similar quantum, as did the S&P 500, gaining nearly 1.5%. Now, the Fed Chair Jerome Powell, in his much-awaited keynote address at the Fed's annual retreat in Jackson Hole, said that the time has come for the policy to adjust, and he added that the time and pace of the rate cuts will depend on the incoming data, the evolving outlook, and balance of risks. CNBC's Steve Leisman now joins us with the key highlights from the Fed Chair's keynote address.
After 2.5 years of fighting inflation, Fed Chair Jay Powell took to the podium here at the Jackson Hole Annual Conference on Monetary Policy, and he laid down a new marker on policy, declaring now is the time to adjust policy downward.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
Powell suggested the Fed, with timely adjustments to policy, could stick that so-called soft landing, saying the Fed could get back to the 2% inflation target with a still strong job market. Those comments on the direction of policy and the outlook for a soft landing helped stocks and bonds. You can see the 2-year there fell. The dollar was weaker. All of that suggesting, like I just was saying to Dom, that maybe the market wasn't fully prepared for a really declarative statement about the direction of policy here that was maybe less hedged than people were thinking. Powell did not, however, specify the pace or the extent of rate cuts, though he did say multiple cuts were coming. So what do you watch now? Well, look for further job market weakness to determine, is that going to be a 25 or 50? Inflation does need to be continuing downward. I don't hear the Fed coming off of that 2% target, so it's still some work to do there. It's got to continue that. And you look for an economy around potential. Any weakness in the economy could make the Fed be more aggressive.
Now, as the Fed Chair Jerome Powell said, we need to be careful of the employment side of the mandate, says Chicago Fed President Austin Goolsbee. He added that the inflation is on the path to a 2% trajectory. Listen to what he had to say.
I think the general notion that we want to be careful as Chair Powell said, about the employment side of the mandate, too. We're not just fighting inflation now. Inflation's on a path to 2%. I totally agree with. I still think, not just for this meeting, over the next calendar year, let's say, I think it's worth looking at the statement of economic projections that the committee has been putting out every 3 months. In those statements, there's widespread agreement that there will be multiple rate cuts over calendar years 24 and 25. Inflation would be coming down, and the unemployment rate would be creeping up a bit and settling in.
Let us also now listen to what market experts have to say about the Fed chair's speech and its impact on the overall U.S. markets.
I liked the speech overall, and I think it reinforced messages that had been delivered that September is very much the time to look for the next move. I think at this stage the odds are much more towards 25. I know the market might be leaning a bit more towards 50, but this situation is not, getting out of hand. He observed that while unemployment has gone up, it is still at normal levels. So while he doesn't want to see it worsen, I don't think he feels the necessity to move dramatically. So I would suggest and expect a series of 25s as the most likely outcome at this stage.
Essentially, this was a valedictory of essentially Chair Powell turning the page, saying the mission, which has been focused on inflation for the last 2 years, has been successful, and that we are there, and that going forward, the mission is going to be maximizing full employment. He doesn't want to see any further weakness. My base case scenario is that we are on a journey of 25 basis point cuts, probably for the next 8 meetings, a couple hundred basis points cumulative. So that's my base case. But if we see weaker growth, and particularly weaker jobs, then I think we could have a bit of front loading and start the process with 50 basis point cuts.
He likes to give straightforward discussions, and his Jackson Hole speeches have tended to be much shorter rather than much longer. And in the past, he made it clear they made inflation #1 priority. Now he has clear that worrying about the downside risk to the economy is his #1 priority. He didn't quite say the all clear on inflation, but came pretty close to saying that, and said that's why he's comfortable and starting to focus on the employment situation. I don't think they're going to start with 50. If they started with 50, that's kind of an admission that something went wrong, something's problematic. I mean, if the the employment report at the beginning of September is wildly disastrous, sure, but I don't think so. I think that they'll start gradually and then pick up pace if the labor market weakens.
All the market experts there on the reaction to the Fed chair speech. But time for a short break here on Power Breakfast. Up next, we'll tell you how all of these overnight cues will impact our own markets. Stay tuned. Back on the other side with Power Prep. Back with us here on Power Breakfast. Time to tell you how will all of those overnight cues impact our own markets. We have our research team joining in with the trade setup, the stocks that are likely to be in the news, and of course updates from the F&O side of things. Well, as you heard Jerome Powell say on Friday, that the time has come for the policy to adjust, and that was the statement that the street wanted to hear. Jerome Powell indicating that rate cuts are now imminent, and he also mentioned that the future trajectory of rate cuts will depend on the incoming data, evolving outlook, and of course the balance of risks. And that was something that Wall Street cheered wholeheartedly, because the US market handover was very positive. The Dow Jones, the S&P 500 and the Nasdaq, all of them ending very with substantial gains over 1.5% at least. And they have almost now back to their record high levels, which they had hit last month. The Dow is almost 200 points away from its record high. The S&P 500 is just 35 points away. The Nasdaq, though, is some distance away, but it needs one good session to recover that much of distance. Is that rubbing off on the Indian markets as well? To a certain extent, yes. The GIFT Nifty still suggesting a 60-point uptick at the start of our trading session. But remember, the Nifty is coming on the back of 7-day winning streak now. In the last week, all of the 5 days, the Nifty ended higher. A percent gains for the week. The Nifty Bank too, despite having a topsy-turvy trajectory, ended with gains of 0.8%. So it is the Nifty and the Nifty Bank that will continue to remain in focus, because it is also the start of the expiry week for the August series. The Nifty is absolutely flat for this series so far. The Nifty Bank, though, has been an underperformer, down almost 600 points from the expiry of the July series. So we'll keep an eye out on that as well. There was only one index on Friday. It was an absolutely sluggish session. Only one index that held on to gains, which was the Nifty Auto Index. The others had a pretty much listless session. The underperformers, though, they came from Realty, IT, and of course the Media Index. That does not have a significant impact on the overall market, but the Realty and IT stocks saw a bit of selling pressure on Friday. A lot of stock-specific news flow will continue. The Nifty rejig was announced on Friday. Trent and BEL on expected lines. Most of it has been priced in by the streets, as is the exclusion of LTI Mindtree and Divi's Laboratories as well. But we'll keep an eye out on if there is any reaction to all of these names as well. But some important questions to ask in today's session, though. Has that speech from Jerome Powell done enough to take the Nifty past its previous record high, which is 25,078, which it had hit last month? But since this is expiry week, will that sentiment be kept in check? Because the banks have been fluctuating between gains and losses, one day up, one day down. The IT index is also not contributing to the gains as well. So will that keep the Nifty gains in check? And of course, last week was one full of block deals, almost 20,000 crores taking place in the last 3 trading sessions. And will that continue this week as well? And will that have an impact on the market? So plenty of questions to be asked. It is expiry week. We'll keep an eye out on some key levels on the index. The GIFT Nifty is still suggesting a 60-point uptick at the start of trade. Over to Abhishek now, who is going to list out the stocks that you need to watch out for in today's session. Abhishek, good morning. What's on your list?
Good morning, Homa. So to begin with ONGC, they have started production from the 5th oil well in the block KG that is there, cluster 2 asset. So earlier in January, oil production were commenced from the same asset with 4 of the 13 wells already flowing. Gas production is also advancing with 3 of the 7 wells online. Reliance Power and Reliance Infra in focus. SEBI has passed its final order with respect to Reliance Home Finance and others. Reliance Power and Reliance Infra were not a noticee or party of the proceedings before SEBI. ZS Life, they have bought 50% stake in Sterling Bio for consideration of rupees 550 crore. Geofin, Finmin has given a nod for FIR stake to go up to 49% in Geofin. Akums Drugs, they have reported the Q1 numbers, revenue up a little more than 5% YOY, and they have turned profitable in Q1 of this fiscal when compared to a loss that they have reported in Q1 of previous fiscal. KEC, they have got new orders nearly about 1,080 crores. Back to you.
Abhishek, thanks a lot for that update. We'll keep an eye out on all of these names. And lastly, Sudarshan joins in with cues from the FNO space. Sudarshan, continue to remain within touching distance of 25,000. How's the setup looking like on the FNO side of things?
Morning, Omas. That's correct. So just if we talk about the last week amid consolidation, we saw market recording gains for second straight week. But on Friday, it was a tight range of trade, and amid that, we saw Sensex and Nifty closing with minor gains. But one sector that has been focused for the last few weeks and might remain in the focus for today as well is the Nifty IT. That's on the back of statement of US Fed Chairman saying the time has come for the policy to adjust. Now, talking about the institutional activities, we saw both FIs and DIs buying shares in the cash market. FIs bought shares of almost 2,000 crore, while DIs buy figure was almost 3,000 crore. Now, if we talk about the August so far, DIs have bought shares of more than 45,000 crore, and they have been buying for 15 consecutive sessions, while sell figure of FIs is almost rupees 30,000 crore. In the index future, amid tight range, we saw FIs buying shares of rupees 92 crore index futures. In the Nifty, they have cut positions by almost rupees 170 crore, while in the Nifty Bank, they have added positions of more than rupees 237 crore. Talking about the long contracts and exposure, they have added contracts of more than 25,000, and with this long exposure remains constant for 52% for last 4 days. Now talking about the options, on the call side, 24,800 call, we saw addition of more than 21 lakh shares with premium at 159. And for 24,900 call, we saw addition of more than 14 lakh shares with premium at 107. On the put side, for 24,800 put, we saw addition of nearly 24 lakh shares. And for 24,700 put, we saw addition of more than 15 lakh shares. With these important levels for Nifty, support is seen somewhere around 24,700 and resistance is seen somewhere around 25,000. Lastly, in the stocks in focus, there are 13 stocks in the band and new entrant is Balrampur Chini. But keep an eye on those two stocks that have come out of the ban, and those are LIC Housing and Piramal Enterprises.
13 stocks still in the F&O ban is starting expiry weeks. Darshan, thanks a lot for that update. On to an important news story then that came out over the weekend. The cabinet has given the nod for the implementation of the unified pension scheme. Now, this is a reform that is aimed at benefiting around 23 lakh government employees. The new scheme, in addition to gratuity, will also include a lump sum payment option upon superannuation. Some of the key features of this pension scheme include an assured pension, where employees will receive half of their average pay from the last 12 months before retirement if they have completed 25 years of service. The spouse will also be assured of 60% of the pension amount in case of the employee's death. Now, the employees will also be guaranteed a minimum pension amount of 10,000 rupees a month upon retiring. Now, it is key to note that the employees will be able to choose between the new pension scheme and those that are already existing as the existing pension scheme as well. Time for a short break here on Power Breakfast. Up next, we get to cues from the commodities market. Stay tuned, back on the other side. Welcome back. Now, ceasefire talks for the Gaza conflict have stalled without a deal, with neither Hamas nor Israel agreeing to several compromises presented by mediators, casting doubt on the chances of success in the effort to end the 10-month-old war. Now, US officials in Cairo commented that the recent conversations were constructive and said that the parties were working to reaching a final and implementable agreement. Now, separately, militant group Hezbollah launched hundreds of missiles after Israel conducted a massive airstrike on Lebanon using hundreds of jets. Now, this exchange marked one of the major clashes in the ongoing 10-month conflict in the region. Now, both sides have communicated their desire to avoid further escalation. And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Looks like this conflict has sent oil prices higher yet again.
Oh, well, absolutely. The couple of points that you mentioned, Harmaz, one, that no progress towards Israel and Hamas ceasefire, and the second about Israel and Hezbollah exchanging missiles over the weekend, clearly has taken the crude oil prices on the higher side. From the kind of lows that we saw in the previous week, we are up by nearly $4 to $5 from those kind of levels. The markets are looking at support from supply risks, escalating fears of broader conflict in Middle East. Also, the U.S. rate cut cheer seems to be supporting many commodities right now in Asia. The dollar index is trading at a 13-month lows, is benefiting buying for many of those. For the crude oil prices, a couple of concerns clearly come in from the fact that the demand growth in 2024 is now being revised lower from various banks and brokerages. Morgan Stanley's latest report has done that. OPEC, while stands tall, but we've seen various other brokerages do that. In the meanwhile, you have the gold prices, which are holding above $2,500 an ounce. Silver prices gained up 2.5% on Friday. The U.S. Fed Powell at Jackson Hole meeting saying that the Fed is now ready to cut rates clearly has led a lot of dollar-denominated commodities trading in the positive. So whether it's energy, precious metals, base metals, we are starting Asia on a positive note.
Manisha, thanks a lot for all of those updates there from the commodity space. Oil prices moving higher again after finding a floor at around $75 a barrel. Moving on to some more international updates now. Powell, the billionaire founder of the messaging app Telegram, was arrested in Paris on Saturday over alleged offenses related to his messaging app. Now, Durov has been traveling from Azerbaijan and was arrested on the back of a warrant as part of a preliminary investigation. Now, the Telegram co-founder is a Russian citizen, and the Russian embassy in France has demanded consular access to Durov and also demanded that his rights be protected. And before we call time on this edition of Power Breakfast, let's first take a look at how the Asian markets are doing now. There's been no change to the losses of the Japanese indices, though. The Nikkei continues to remain 1% lower, as does the South Korean indices that continue to trade below the flat line. The Shanghai index has also now trading below the flat line, trading with modest losses. But the two outperformers are on your screen right now, the Hang Seng and the Taiwanese index, both of them trading with gains of over 1%. Similar quantum to which was at the start of the show as well. So these are the two indices that remain the outperformers across the Asia Pacific. Losses coming in from Japan, South Korea, and of course the Shanghai Composite as well, who are trading with modest losses, but the losses are being led by Japan, and the GIFT Nifty continues to indicate a slightly positive start for our own markets as well. With that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call comes up next.